Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the total risk, which includes the price risk, the on-chain risk, and the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale, of course, is ending at the end of the month. Let's go ahead and jump in. So, the last three videos that we did were on the price risk, the on-chain risk, and the social risk. And hopefully, I've done a decent job of explaining all three of them. But the point is to combine all three of them into a single risk metric to sort of rule them all, if you will. And you can see that this risk metric includes the price, the on-chain data, and the social data. So if you're unfamiliar with what each one incorporates, the price risk includes the legacy risk metric for Bitcoin that we've had since 2019, the total market cap risk for the entire asset class, logarithmic regression for Bitcoin, total cryptocurrency market cap regression, the corridor that I've previously used on the channel, the fear and greed index. The on-chain risk includes the MVRV z-score, the Peel multiple, the MVRV score, the miner cap to thermocap ratio, the transaction fees, the market cap to thermocap ratio, and the terminal price. And the social risk includes YouTube subs, YouTube views, Twitter analysts, Twitter exchanges, and Twitter layer 1 followers. All right? So, if you put all of them on the chart, price risk, on-chain risk, and social risk, this is what it looks like. Now, the social risk only becomes a thing here in 2016 because there wasn't really a whole lot of people talking about crypto, in the early days. I mean, there were a few people, but not really a lot to really gauge what the traffic was in any meaningful way. But these are the three different risk metrics, and if you just look at, say, the last couple of cycles, they tend to track each other fairly closely, although it is certainly not exact, right? So then the purpose is then to combine all three of them into a single risk metric. And if you do that, this is what you get, right? So the idea is that it goes from 0 to 1, and low risk is, near 0, high risk is near 1. And the idea is to DCA into Bitcoin at low risk and to DCA out of Bitcoin at high risk. Theoretically, you would do it dynamically where, if it reaches some of the lower risk levels, then, or at least if it reaches some of the higher risk levels, but the lower part of them, if you sell, it would only be a smaller amount theoretically. And the higher up you go, then the more theoretically you would sell. I mean, you could see that in 2019, this risk metric made it all the way up to around 0.5 risk before doing a U-turn and coming back down. And in 2015, we sort of just kind of hung out in the 0.1 to 0.2 risk band for basically the entire year, except at the very end of the year where we went up to around 0.3 risk or so. Now, right now, the total indicator risk for Bitcoin is sitting at approximately 0.286. Now, one of the reasons it's so low is because the social risk is so low. And I've shown this on the channel. There's not a whole lot of people interested in crypto right now, right? There just isn't. We've seen views go down. We've seen, subscribers go down, not just difficult. A lot of the larger channels are having difficulty finding new subscribers. Not that they're not finding any, but it just looks night and day compared to what it used to be. And so the social risk is one of the reasons it's still so low. If you turn the social risk off, it looks like this. Now, if you turn it off, you can still see it didn't go quite as low as it previously has, at least not at this point. But you can also see that in last cycle, going into that very brief recession that we had in 2020, we did come back down into that lower risk band. But it took until, March of 2020, approximately 2 months before the Bitcoin halving. Now, the next Bitcoin halving is, I believe, going to be about a year from now, right? So we still have plenty of time before the next halving gets here. Plenty of stuff can happen. I mean, you can see in 2019, we rallied until June, and then we came back down. In 2015, it was sort of a 3-month rally, and then a 3-month fade, and then a 3-month rally, and then a 3-month fade, where basically, or maybe reverse that, but basically it was just sort of, both sides sort of flipping who gets wrecked for the entirety of the year. In 2019, it was just 6 months straight of the Bears getting wrecked, and then 6 months straight, more or less, of the Bulls getting wrecked. And so that's typically what we see in pre-halving years, right? You get both sides sufficiently wrecked before going into the halving year, which is typically when we go back up to the higher risk bands, like the 0.8 to 0.9, 1 risk band, either in the halving year or say the year after the halving year, right? The post-halving year. That's what we historically have seen, and I'm still operating on that general assumption. You could also turn off the on-chain risk and just include price and social risk and kind of see what that looks like. If you look at it like that, you can see where we currently are. It's 0.267. And if you just care about the on-chain and the social risk and don't care about the price risk, then the risk will be 0.260. This is an interesting way to sort of create a risk metric. And one of the interesting things about it, if there's a certain indicator you don't think should provide as much weight, or you think one should provide more weight than the others, you can actually play around with that, right? Like you can say, all right, well, maybe the transaction fees shouldn't play as much of a role in the risk metric that you want to use, so you could lower that down to say 0.5 risk and see how it might affect the total risk chart. Now, any individual metric isn't going to make a huge difference just because it's an average of all of them, but I mean, again, if you turn all of these on, I mean, you can see how the risk metric does subtly shift, right? And if you turn all of them on that we have on here, this is what it currently looks like. So hopefully these videos are useful. We can also color code this stuff to see what it looks like right here as well. Let me go back to sort of the default setting that we have it on. If you look at it like this with all three, price, on-chain, and social, this is what it looks like, right? So you go from high risk to low risk and back and forth and back and forth. And I mean, right now, so far, this looks somewhat similar to 2019. Really not that dissimilar from what we saw back in 2019, where we rallied for a few months. Mainly the rally back in 2019, it started we started gearing up for it in the early part of the year, but we broke above the 20-week SMA in April, and then we rallied from like April, May, and June. And then we spent the second half of the year fading that rally. This time we broke above the 20-week SMA, I believe I think it was in January. And then since then we've had, so basically January, February, March, and April. And now we'll see if Bitcoin can push up again in May. We put out a video not too long ago talking about, is the move in April, mid-April, sort of the final one, or will it push up, again to a slightly higher price, kind of like 2019 did in May? We will, of course, wait to find out. But the point is with the risk metrics, right? No one knows exactly what the market's going to do on any given day. So the idea is to just follow a strategy and stick to it no matter what, right? That's the idea in terms of navigating the cryptoverse, rather than concerning yourself too much with what's going on in the news and the headlines. Just finding a strategy, sticking to it no matter what, DCAing in at low risk levels, DCAing out at high risk levels, and so on and so forth, right? Now, I will say, I mean, I've said this many times, right? This applies to Bitcoin, and I will reiterate that DCAing into the altcoin market at this phase, while it can lead to making some money, a lot of altcoins won't recover in the ways that a lot of people think they will. It doesn't mean they can't go up if Bitcoin USD goes up, but a lot of them will likely just put in new lows regardless later this year and early next year, right? That's a reality. And so for me personally, I will remind people, I know a lot of people don't like this reminder, but when I talk about this stuff, I'm referring to Bitcoin, right? Bitcoin is essentially the only cryptocurrency I've bought in 16 months. I haven't bought any other cryptocurrency really since the end of 2021, mainly because I think that the Bitcoin dominance is heading higher. And so the argument, of course, is, well, if you're going to buy something, why wouldn't you buy the thing that you think is going to be increasing in dominance over everything else, right? That's the general idea. And the dominance theory, remember, is that it should go up no matter what, right? No matter if Bitcoin USD goes up or if Bitcoin USD goes down, which I think it'll do both of those, of course, this year. The pre-halving years, we normally get everyone wrecked, both the bears and the bulls. We say that time and time again. And I think people then act surprised if the price goes up. Well, it's like, well, we said the bears are going to get wrecked. We also are going to say the bulls are going to get wrecked. By the end of the year, everyone's sufficiently wrecked, and then we go into our halving year. So again, the DCA stuff at this phase of the cycle typically favors Bitcoin, right? And even late last year, and even in the summer of 2022, we were at relatively low risk levels. But as you get later on into the pre-halving year, like say Q3, Q4, and maybe early in the halving year, then the altcoins can start to make some sense if they've really devalued on their Bitcoin pairs sufficiently. Typically, that doesn't really occur until the end of the third quarter. So until we really get to the end of the third quarter, I'm still going to be in the camp that Bitcoin dominance should continue much higher, to the dismay of the altcoin market and to the dismay of altcoin Bitcoin valuations, and so on and so forth. So that's where I stand on crypto. Bitcoin dominance should continue to go up no matter the direction of Bitcoin USD. We'll see if Bitcoin, what Bitcoin does here over the next few weeks as we go into the summer months. And of course, the risk levels will respond in kind. Again, right now, the total indicator risk for Bitcoin is 0.287. Still relatively low. If you turn off the social risk, it's at 0.333. So slightly higher if you turn off the social risk. The social risk is turning down, actually. So I imagine that will help suppress the risk level for some time to come. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I also want to mention one more thing. I will be going to, I don't really go to that many conferences, but I will be going to Bitcoin Miami. And if you want to, I'll probably be doing like a meet and greet at some point. So if you want to go to that, feel free, and I will send out more information later on the meet and greet. Anyways, that'll wrap it up. Thank you guys for tuning in. I'll see you next time. Bye.